The scale of Nutrien always blows me away. I mean, it's the world's biggest provider of fertilizer, sales of more than 25 million tons of nitrogen, potash and phosphate products on an annual basis. And then it also has more than 1,700 agricultural retail locations in North America, Australia and South America. World's biggest producer of potash, the superlatives continue. But the stock has been languishing. I mean, it dropped during COVID. It has come back to some extent, but still down from its levels of 2019. We're joined by Chuck Magro. He's the CEO of Nutrien. Chuck, it's great to talk to you. I mean, tell us, why do you think investors are just not excited right now? You're making money at Nutrien.
Yeah, well, first of all, thank you for having me. Absolutely. So, look, if you look at what's happened at just broadly in the agricultural industry, it's had several really tough years. So the first thing, of course, is weather's always an issue. In the last couple of years, we've had major droughts and wet weather across the world, which is fairly normal for our industry. But the trade wars have really impacted the overall fundamentals and lowered pricing. So the US-China trade war, but also the Canadian-China trade war, all these things have impacted and weighed on pricing. Where we are right now, though, when you look at it, is crop prices are actually quite strong. And fertilizer prices are up from their lows as well. So all of this, of course, is backstopped by very strong demand for food. So when I think about it, I think hopefully the worst is over. And when you think about looking forward to 2021, we're actually quite optimistic that we're going to have very solid fundamentals moving forward.
Now, that's interesting that you touch on the trade wars. You mean Mr. Trump's dispute with China in particular, disrupting soybean exports, for example?
Well, look, the U.S. farmer was on the front lines of the trade war between the U.S. and China, and that distorted trade patterns all over the world, and soybeans is part of it, but it's much bigger than that. So we're hopeful that that's behind us. China actually is buying a lot of corn, a lot of soybeans again. Trying to reach their commitments with what's called phase one of the trade agreement. And that is supporting prices going forward. So hopefully the worst is behind us when it comes to the agricultural fundamentals. And so, as I said, prices for corn and soybean and most crop commodities in the agricultural complex are actually up fairly significantly year over year.
Now, it's interesting, we do obsess about fertilizer prices when it comes to you guys, and we'll talk about those in a minute. But the CIBC, they like your stock. They estimated in early August that your assets were about $80 a share, and almost $40 of that was the retail, selling stuff directly to farmers. And that business, the margins have been holding up anyway.
That's right. So our retail business is our largest business. It's the business that works directly with farmers around the world. We have a relationship with about 500,000 farmers worldwide. And this business has been very stable. It's growing. And one of the benefits that we've seen recently in 2020 because of COVID is actually our online orders have reached or will reach $1 billion of sales this year. So this is a business that is also bringing e-commerce to agriculture, which is pretty exciting and a new business for us.
Tell us about your dividend. What is your policy on increasing the dividend? Because the yield is pretty rich right now.
So the dividend is a core part of how we allocate capital. The strategy's always been to have a sustainable but growing dividend. And since early 2018, when we put the company Nutrien together from the merger of Potash Corp and Agrium, we've increased the dividend quite substantially. So what we like to do is we like to target the dividend somewhere between 40 and 60% of our free cash flow. And today it sits nicely in that range. And as the market fundamentals improve, we see a nice pathway to continue to increase the dividend over time.
And we're looking at a yield of something like 4.6% right now. Pretty good for an industrial company. I should ask you, we're in this incredible situation. It's almost like game theory. I'm sure you've been tempted to consult game theorists if you haven't. BHP, they keep talking about maybe building the giant Jansen potash mine in Saskatchewan. They've sunk something like $4 billion into the thing already. And you've been vocal saying, I just don't think it would be a good move. But of course, you're preaching your book here. You do not want to see a big rival potash mine.
Well, if you think about potash, it is a little different than other commodities. When you're talking about the actual commodity, if you think about Nutrien, just to look at our business, so we are the world's largest potash producer. We have 6 world scale mines in Saskatchewan that we run on an integrated model. But then we move that product all over the world through our supply chain. And most importantly, we have decades long relationships in the emerging market. So we have our people, boots on the ground, helping farmers around the world maximize their food production, because this is all about food security for governments. So to then think about, well, there's going to be a new entrant and they're going to build a new standalone mine in Saskatchewan, well, that's only part of the story. And in fact, that makes absolutely no sense economically, simply because you still have really a quite robust supply chain you need, and then the relationships around the world to help farmers maximize their food production. That's why our business model is so unique when it comes to being integrated from upstream through to downstream. And I think we have such a strong competitive advantage when it comes to our potash business. So when I look at just the economics, to me, it just doesn't make sense.
I've got to ask you just about fertilizer generally, because obviously fertilizer has become, nitrogen fertilizer I'm thinking about in particular, has been implicated in climate change. It's a big user of energy, natural gas in the case of North America. Are you worried that that could become, down the road, a target for activist investors who've gone after oil and tobacco, for example?
Right. So look, nitrogen fertilizer is absolutely necessary to feed the planet. There is no substitute today. Companies like Nutrien and many, many others are looking for alternatives, but today one does not exist. And the only other option that we have as a planet is not to use the product. But if we didn't use the product, we would need a substantially a larger amount of arable land, and that would be devastating from a climate change perspective. So the goal should be to be very efficient and to drive new technology and to use what we call precision rate variable technology to ensure that every pound of nitrogen fertilizer we put on, we're maximizing food production. That technology exists. It's not used all around the world, so we need to get that technology into emerging markets. But certainly from our perspective, nitrogen fertilizer, as well as phosphate and potash, they're absolutely critical to ensuring that we're feeding our planet. There's really no other way to do it on a commercial scale and basis that we have today.
Oh, yeah. I mean, something like 40% of the people alive today wouldn't be around, apparently, if it wasn't for nitrogen fertilizer.
That's exactly right.
Chuck, we'll have to leave it there. Thank you very much indeed for joining us.
Thank you very much.
Chuck Magro is the CEO of